Okay, good morning. Thank you everybody for joining us here in St Martin's Hall. I think you all got the memo about it being a different location this morning. So we're here joined this morning for the Scrutiny Management Committee public hearing into the State's Accounts 2025. It is a parliamentary hearing, and so it's please no questions from the public, although the public obviously invited to watch, and we will be it's live streamed on YouTube, and there will be a Hansard transcript after this at some juncture in the future. Today I'm joined by Advocate Peter Harwood and Claire Savage. I'm joined by an advocate and an accountant, and I'm an economist. There's a joke in there somewhere, I'm sure. And the three of us are here as representatives of the Public Accounts Subcommittee of the Scrutiny Management Committee. There are one of the other members of the Public Accounts Subcommittee in the audience. I shall wave to her now, but thank you very much for coming this morning, Eleanor. But we always go with a panel of three. So we're here to talk about the accounts that will be debated by the states in a little over 10 days, if I can do my arithmetic. Maybe it's 9, I'm not sure. It's a week on Tuesday. And we're joined this morning by a large cast from Public and Resources. And Deputy de Sommeray, if I may ask you to introduce your team.
Good morning. I'm Deputy Lindsay de Sommeray. I'm the President of Policy and Resources, and I think they are all very capable of introducing themselves. So maybe if we start at...
Andy Niles, Member of Policy and Resources.
Charles Parkinson, Treasury Lead, Policy and Resources.
Bethan Haynes, States Treasurer.
Gareth Fuchs, Head of Finance.
Okay, thank you very much. And Andy, welcome to, I think you're the newest member of PNR. And Charles, I appreciate your Treasury lead, and obviously Lindsay, you signed off the accounts as lead. Andy, is there any particular areas we should be looking to focus you on? I'm not entirely sure your role in PNR.
No, I think you can ask us the questions. I don't need to lead you, I'm sure. We're here to answer all the questions that you might have. Anything technical, please, Bethan and Gareth will answer them for you.
Okay, I'll direct questions. What I will say is that we've got quite a few questions this morning. We've only got 2 hours. We will be taking a break roughly around the halfway point. I will try not to gabble, but I will try and keep proceedings quite fast. I will cut people off if they're blathering. I'd like answers that are to the point. And so if answers go on past the 35, 40 seconds mark, we're not actually getting to the point, I will ask us to move on. And I'll go for the same from my own side, because we have got a lot to cover this morning. One final thing, we do get lots of emails from the public asking us questions of the accounts. And what I do intend to do, this is part of this process, is follow up. There is also a generic emails that we all get as deputies, one of them being Public Accounts 50 or something like that, 2025. And we'll consolidate those questions and forward them on behalf of the public after this, and look hopefully to publish those answers for the public before the state's debate. So the purpose of the hearing, from my perspective, or from the committee's perspective I should say, is not to re-audit the state's accounts obviously, nor to challenge compliance with the international accounting standards. That's not our role. The purpose we've decided, is to see if these accounts here, have a listen. Yes, there we go. Not quite as noisy as this morning, but there's a bit more weight on there, isn't there? Is to enable deputies, see if they're fit for purpose, and they enable deputies and the public to understand the true financial position of the states, because that's really the role of the accounts, isn't it? We'll examine whether the increasing complexity of the presentation of the accounts and the financial reporting has improved transparency and accountability, or whether it's made the accounts more difficult to follow. We'll also seek to establish the extent which the headline financial results reflect the underlying fiscal position of the states. And the central theme, if I'm not just sort of a spoiler alert, but if they're technically compliant with IPSAS and they may satisfy external audit. But one thing I did notice is that the Treasurer's report readers had repeatedly referred to away from the headline figures and towards alternative measures of performance, and we'll be looking to try and understand that. Why we've got a group surplus of 106 million, a core government operating surplus of 45 million, an underlying funding gap of 50 million, reduction in account balances, etc., etc. Because the central question is, if informed deputies struggle to identify the true financial position, then how can we reasonably expect the public to follow? So the key objectives today, we're seeking to establish some questions on governance, like who's responsible for the preparation of the accounts, and their oversight, looking at the IPSAS and financial reporting, whether it's improved understanding of the accounts, and the financial performance, which measures are the best to follow, that should be guided to the public and deputies, and looking at internal controls and what projects and controls are being used to understand or to ensure that proper governance is followed and that write-offs are transparently recorded, and then spending and fiscal sustainability. So, with no further ado, we'll split it up into two halves, as I promised. Our first section, before the break, we'll do governance and accountability. We'll do fit for purpose, the nature of the accounts. We'll do unrealised gains and ipsus and accounting complexity. The 4 topics before the break. And I shall move to my colleagues, and I'll start with Peter, if you would like to start and ask your first question around governance and accountability.
Thank you, Deputy. I'll start at the beginning, and before we get into the granularity of the accounts, just one or two issues about governance and oversight. Looking at page 51, which is the auditor's sign-off, auditor's certificate, just so I can understand, what is the actual internal process within P&R to actually approve the accounts? Do you have an audit committee within P&R? Could you perhaps just comment on the actual internal process whereby we get to the audited accounts?
Yeah, no, we don't have an audit committee. We are a committee of 5 members, and generally we take all decisions together.
And in the auditor's certificate, they say we communicate with the committee. We also provide the committee. That is the full committee, so you're all cited of everything.
Yes.
And the actual sort of decisions, if you like, insofar as there are decisions that have to be taken by the committee as part of the IPSAS process, that's taken by the whole committee.
Yeah.
Okay.
All meetings? All meetings?
Sorry?
With the auditors.
All meetings are taken by the whole committee?
Well, yes, meetings with the auditors.
Yes, the auditors came in and spoke to us all.
Okay.
Yeah, but all meetings are covered by the whole committee. There's no subset of individuals that aren't acting as liaison.
How often do you actually meet as a full committee then with the auditors?
We met
Several times.
I think that generally at least once for audit planning purposes, once to receive the draft audit findings report, and then once when the accounts are signed off.
Okay, okay. Thank you for that clarification. One of the questions that has been raised, and I think it is confusing. The report is made solely to the members of the committee on behalf of the States of Guernsey. Does that mean, therefore, that, I mean, we have, I think as a committee, have tried to get access, for example, to the management letter in common parlance. That's not apparently available to anybody other than your committee.
To the what, sorry?
The management letter. I mean, this is normally in the audit process there will be a management letter which is prepared by the Charles. You'll know the background.
Yeah, well, they make their report, as they say, to the Policy and Resources Committee on behalf of the States of Guernsey. And that's mostly, I think, about potentially limiting their liability to other third parties who might seek to rely on the accounts.
But I mean, can deputies question the auditors? Do we have that?
No, they haven't had that opportunity.
We did ask to speak to the auditors, didn't we? And we were refused.
I believe that was on a specific issue.
Oh, okay.
Was that the one question on the Pillar 2 income?
Yeah.
Yes, but did we not also ask for a general meeting?
No, we asked on the basis of Pillar 2.
No.
And the answer was no, because they haven't audited the Pillar 2 forecast.
An estimate.
So that forecast is purely within P&R?
Yeah, they audited the 2025 accounts.
Yeah, okay. But the 2025 accounts do actually contain an estimate of the Pillar 2.
Of Pillar 2 income for 2025. What
Yeah.
it does not contain is an estimate of future Pillar 2 income.
And that was what we understood, certainly the question to have been to them, which is why they declined to meet on that basis.
I mean, in the days of old, when we had a public accounts committee as a separate committee, that committee had access to the auditors. Is that something you would perhaps encourage, or would you like to encourage? That there should be some external committee that can approach the auditors?
I think it's certainly something we could look at. I mean, we're obviously not in a position to make a decision here and now, but I think it's an interesting suggestion and certainly one that we can discuss.
I mean, there is an extant resolution, I think, going back to 2019 or 2018, 2019, which suggests there should be an audit committee or audit commission.
Yeah, I
and
thought
that
that was.
progressed.
I thought that was from SMC. That was related. I thought that was supposed to be a sort of subcommittee of SMC.
The suggestion has been made. I don't know who's following up on it.
It's in the report.
You will recall that there used to be a public accounts committee, and that now is absorbed into SMC, as far as I understand.
Yes, but some of the authorities that originally extended to that public accounts committee got usurped back into P&R. And sort of appointment of the auditors, which used to be a public accounts committee, matters relating to interviewing the auditors, that again was taken away from the SMC.
Yeah. And just to clarify, I just wanted to break that down into there's obviously extant resolution 2018 was about creating an audit committee. It's separate to where the auditors are appointed by PAC. There was two aspects to that, isn't there?
So, sorry.
I don't want to misspeak, but my understanding is, my recollection is that the auditors have always been appointed either by the Treasury and Resources Department or the Policy and Resources
Well, there was certainly
Committee.
some input for the PAC before 2016. I mean, this is going back.
They were appointed by PAC back in the day, a long time back, but before 2016 changes, and it was subsumed back into the it was centralised. And as a halfway measure, it was suggested that maybe an audit committee. And what we have, in effect, is the P&R appointing the auditors on behalf of the states, and it's reporting on behalf of the states, but only P&R even get to see the management letter. Yeah. So in terms of governance, I'm sure anyone with a notion of governance would appreciate there's a bit of a conflict in there.
I mean, certainly, I don't think anyone's ever approached P&R to speak with the auditors ahead of the request to look at future Pillar 2 estimates, but we'd be more than happy to have fielded any such request. But also, it's probably worth pointing out that there is an internal audit team as well who
but they've been very busy the last few months, haven't they?
So we've dealt with them with the internal process, which, as we understand, the full committee meets with the auditors. The full committee then approves and engages with the auditors, essentially. I think that is clear. Can I understand? The other issue I think we have is the timing of the publication of the accounts. I mean, they were signed off, obviously, by the auditors on 2nd of June 2026, and I noticed, actually, they were signed off by, on the bottom of the Consolidated Statement of Financial Position, there's a typographical error, because they appeared to be signed on 2nd of June 2025. But beyond that, can we understand what are the time constraints on the preparation of the audit? Because, I mean, it's already been mentioned that there will be a debate on the audited accounts within the next 10 days. There haven't been much time, actually, for publication and for consideration. What are the major time constraints on the preparation of the accounts?
I think you can probably
answer. So I guess the complication in finalising the accounts is the group consolidation. And of course,
it relates to the consolidation aspect.
Yes, each entity has to complete their year-end processes by the end of March. Yeah. And then we have the consolidation work, which is complex and takes the rest of the time, basically.
I mean, obviously, I know you've had a closer involvement with the accounts in the past. Have you anything to add to that? I mean, I think, is there any way we can progress, any way you can actually encourage the auditors, to a more speedy approach?
Well, we've adopted IPSAS accounting standards, and that means we have to strip out, for example, intra-group transactions, which is a colossal task in itself. So in consolidating the accounts, there's a lot more work now than there used to be.
Right. And that's down to IPSAS, really.
Yeah.
And we may come back to IPSAS later, I think. There's some further follow-on questions about the effectiveness and whether it's been worthwhile actually adopting that. Can I just then So, I think the point has already been made. I mean, from your perspective, would you favour having a separate audit committee to actually to scrutinise the accounts rather than just relying upon... I mean, at the moment we can't scrutinise in full because we don't know the management letter, for example, and we've had no engagement with the auditors. So we are approaching this with one hand tied behind our back.
I don't see any harm in... I mean, if you're talking about a kind of revived Public Accounts Committee,
Yeah.
you know, I've often should consider adopting an Auditor General the way Jersey has,
Right.
because I think greater scrutiny of public finances would be sensible.
Okay.
But I don't think there's any point in P&R subdividing itself into an audit committee and whatever committee.
But you'd favour a separate entity.
Yeah, I would welcome more oversight, if you like, over the accounts process.
I mean, to be fair, go on, sorry, please.
Could I ask Deputy Niles, as a newcomer to the process, both as a new deputy and a new member of P&R, what is your observation?
So one of the first meetings that I had with P&R was to meet with the auditors and to go through the accounts page by page and line by line, trying to understand the various component parts. And it was a lot. It was a meeting that took the best part of the day. And you can imagine that we got to the end of this, and there was numerous questions that we had asked, and we asked our support team to be able to liaise with the auditors to make certain provisions and changes within the accounts. But it is a lot for the committee to do. And in relation to the management letter, that I can remember specifically asking the auditors as to whether there was anything that they wanted to point out to us, and that there wasn't anything particularly. But it as quite rightly you ask, as a newcomer, looking at the scale of the task in that short period of time, it's a lot.
So you appreciate that if you've had the benefit of a whole day with the auditors, you know, how it is very difficult for anybody else to even be able to scratch the surface of scrutinising these numbers. And I've got a question for you, which is, you're based in finance, you know, would you expect a listed company of similar size not to have an audit committee?
Well, I think following up from...
just a straight yes or no will do.
I'd say that they would have an audit committee, yes.
Yeah.
But they'd also have a much bigger board.
Yeah.
It's also worth pointing out, I mean, Deputy Niles has described his experience, but what he was particularly dumped in the deep end because he hadn't had the benefit of the previous conversations and the previous work that we had
But you only had
through that.
3 meetings.
Sorry?
You only had 3 meetings with the auditors.
Well, with the auditors, as I say, I'm not aware that we've had that P&R has been approached by anyone to have that conversation, bar the quite recent request from the SMC about that specific question of Pillar 2. I'm not aware that there's been any request to meet with them up until now. It's certainly something that we're very happy to explore.
Obviously, our letter must have been one of our plethora of letters must have not been written. But
I think
going forward next year, we'll ensure that occurs. Then, so thank you very much for the invitation, and we'll ensure that the public subcommittee.
And you'll encourage the auditors to engage.
Thank you very much
with this committee.
We shall.
Thank you.
Shall
we move on?
Move on. Yeah. Okay. I think it's me now, I believe, and looking at the numbers. So, like I said, it's only my introduction. There's lots of numbers in here. There are. Let's have a look now. Is it 400? I can't remember how many pages. A lot of pages of numbers. There's, in the Treasury summary, there's a group surplus of 106 million. There's an operating surplus of 68 million. There's a core government surplus of 45 million. There's a funding gap of approximately 50 million. And there's a cash reduction of 9 million. There's lots more numbers in there. But can I just ask, therefore, and Charles or Bethany, I don't mind if you wish, which single figure should deputies focus on when assessing the state's financial position?
Well, the accounts as a whole paint the picture of the numbers that you've quoted. I think the consolidated surplus of 106 million is the headline figure.
So 106 million is a surplus, is the one figure we really should focus on.
Well, you should focus on all of the figures in the accounts. It's a complex story, and there's a lot of detail which adds colour to that. But if you wanted a single headline from that report, I would say focus on the consolidated surplus.
Okay, thank you. So I think your answer alludes to one of my questions is, in terms of the accounts, what I'm trying to understand is, are the accounts primarily written for experts, or are they primarily written for the public, or the citizens or deputies? Who's the primary audience?
If they were the accounts of a public company, they'd be written for the shareholders. So I suppose you could say the shareholders in this case are the people of Guernsey. But they're addressed to Policy and Resources on behalf of the states of Guernsey.
So deputies, public, probably their intended audience, if it's in a bit of an indirect one.
Yeah, I think everybody should be informed by these accounts.
Okay, because we had some questions there are some sort of thought processes that we had, which is, it's very difficult for us to look at a consolidated picture of core, non-core, and get an idea of what every £100 of taxation is spent on, and that you see in the UK and such. So has any consideration been given to providing that sort of information within the accounts?
Are you talking about a sort of pie chart showing what percentage goes on health, what percentage goes on?
Yeah, we have got various charts that sort of do that. I mean, I think, the important thing about the accounts is they are prepared in accordance with the relevant standard, which is important because that allows comparability with other places that use the same standard, for example. But, of course, we do have the public in mind, and so there is narrative as well. And actually, one of the Deputy Niles will probably attest to this. One of the big areas of focus when we were going through was to make sure that actually the narrative was as accessible as it could be. I mean, it's a pretty dry subject, and we're realistic. We don't think a huge number of islanders are going to be pouring through the accounts, but it's important that they're there for anyone who does want to. And it's also important that we keep that language accessible, whilst aligning with the relevant standards that the States has directed us to adopt.
That's a good question. I mean, you sort of say about the narrative. One thing that did strike me, particularly in the Treasurer's report, was obviously if we're reporting to an IPSAS standard and there are various headline numbers produced, is how much the narrative said, well, don't look at the numbers. Don't look at the numbers, really. I'm trying to remember how it looked. If we go to, let's have a look. Page 4, I'm after, yes. So the group reported net surplus of 160 million. It's 106 million, Charles, if you say. But that's after allowing for 190 million investment gains, most of which have not yet been realised. Okay, that's fine. The income tax revenues increased by 110 million, but an estimated 39 of this came out in instruction overseas PL2 and a further 34, so that's not expected to recur in future years. And it goes, although income increased by 14% and the reported surplus improved by 86 million compared to 24, much of this improvement is driven by one-off items. So there's a lot of, actually don't look at the numbers, you need to understand a bit more behind the numbers than there is in that summary.
I think that we encourage the Treasurer when in our discussions, it's an interpretation of of the cold, hard numbers that are very clearly in the accounts. And we wanted an explanation for people to understand how we got to the discussion of the shortfall or the deficit in what we want to achieve versus what the numbers are being reported. And so I think her narrative quite helpfully does that.
I think just to put a little bit more colour on what Deputy Niles has explained, especially because of the focus on tax reform proposals and the funding gap, we wanted to articulate clearly the difference between the accounts and the structural financial position, because there is an important distinction to be drawn between those two things. And we were worried that without a little bit of narrative around that, people might conflate the two. So obviously the accounts is a retrospective look at a snapshot of a financial position, but when we're looking at structural, longer-term financial position, especially when we're looking at projections, that's obviously forward-looking, and we thought, especially because of the increased focus on the financial position at the moment, because of the upcoming tax debate, we thought it was important to clearly articulate the difference between those two things so that people didn't confuse the numbers in the accounts or use them or interpret them in a way that would have been inaccurate in another context.
Yeah, I think you make my point for me, actually. There, you were saying actually the accounts, which are nice and transparent and should be useful to know because they meet international standards, need to be explained to give you the numbers that we want you to focus on, as opposed to 106 million operating surplus dollars, which is the one that you said was the main number. Yeah, and you introduced the concept, Lindsay, of the 50 million, sorry, Deputy Summary, of the 50 million funding gap, right? And, okay, well, where does that concept come from out of the accounts? And I'd like somebody just to point to me the table of how you work that out, because it's not explained in the tables.
Because the accounts are in relation to the 2025 financial performance of the states. So what we've tried to do in this report is focus on the performance in 2025, but as the members have said, explain some of the numbers that help understand that it's not just a headline. You can't just look at a headline number and determine that everything's good. You need to look below those numbers, and that's what the report...
You can't just trust the presentation of the accounts to understand them. You need somebody to provide a narrative on the front to get to the preferred narrative.
All accounts have a narrative that explains the numbers.
And I think, this is for the public. We are trying to aid, we're not trying to just produce reams of numbers that might not make sense to people. The whole fundamental principle here is making them more understandable to people who might want to look at them.
Peter has a question. Well, Peter, stop there. But before Peter has a question, I just want to just wrap this one off. So, in terms of making it understandable for everybody, could you go through these accounts and take me through line by line how you get to the 50 million funding gap? Just talk me through it.
That's set out in the tax review.
No, I'm not asking for the tax. I'm asking how do you do it in here? How do you do it? How do you get there? How do you get to it from these accounts? Talk me through it now.
Sorry?
Talk me through it, how you get to the 50 million funding gap from these accounts.
It's not set out in those accounts.
Well, talk me through how the calculation is done. Talk me through, go table by table.
So, sorry, what exactly is your question?
How do I derive the funding gap using these accounts?
So the funding gap takes into account a number... Okay, I'm just explaining for you. It takes into account... the accounts look at certain things, and it is a snapshot of 2025.
I don't want a qualitative
When we're looking at the funding gap, we take into
someone
account...
to talk me through how you get to the 50 million funding gap using these accounts.
Well, it's not set out in those accounts.
Because
it's
it
set
doesn't
out
relate.
in the tax review policy letter. Which
but you must take the numbers from here. Show me your working. Show me how you get
So a funding gap is not a snapshot. It is a long-term thing. And actually, one of the most useful documents was one that you were authored.
Which number do you take off?
It is explained in the Treasury's... I think in page 1 of the Treasury's...
It's not justified. It doesn't talk you through it. It's referred to.
It quite clearly says that you take the 106 surplus, you then reduce that by the investment gains, and then you reduce it again by the one-off tax position to get to the 50 million. And that 50 million is a composite of requiring 2% of GDP to be invested yearly in infrastructure.
Which is something that actually was helpfully articulated in a report that you authored with a different hat on. So,
yeah, no, it's, as you'll know, it's referred to extensively in the Fiscal Policy Panel Review paper.
But I think the fundamental point is the funding gap is a longer-term issue. You know, that takes a long-term view of the public finances, whereas the accounts, by their very nature, is a snapshot of a specific year. So I think that's the fundamental difference. And we were just concerned that people might not necessarily understand the difference between them, which is why we have added a bit of explanation in there. But as Charles says, you know, it's not the job of the accounts to go into that particular issue. We just want to make sure that the accounts aren't confusing people in that respect. But in terms of the analysis on the funding gap, we have provided information in a policy letter that was published on Monday.
I was just going to add that all of the numbers that take you from the surplus to the underlying funding gap are in the accounts. And I can talk you through them if that would be helpful.
Come.
So the net surplus is 113 million.
Which is on
Talking about, which is in the Treasurer's report.
I thought it was 106 million.
Well, that's for the group. We're actually we're talking about core government now, because that is what our taxes are driving. So we've excluded the trading entities. So a surplus of 113. The investment gains, which are obviously paper gains, have been removed for 119 million. The income that did not relate to 2025, so related to previous years, that's been removed. That's 34 million. There's been an adjustment just to between what we're charging as depreciation and what the state's policy is of 2% of GDP being spent on CapEx. That's a further 20 million. And then we've also removed the provision which has been made for the PFAS clear-up at the airport, because that's not part of our underlying position. That's 10 million. So that takes you to a £50 million funding gap in 2025.
And we do summarise that by saying, with one-off items and unrealised investment valuation excluded, and after adjusting for the long-term capital investment requirement, brackets 2% of GDP, close brackets, the underlying financial position of the group had a funding gap to close of some 50 million in 2025.
So remind me, show me which page is that, because I have lost track of it.
Yeah, I've just got that and as an isolated.
I think it might be on page 1.
Yeah, I think it is somewhere very near the beginning.
Page 4.
Page?
Page 4.
Page 4. Well, yeah.
Page 4.
I don't.
Page 1 of the narrative.
Just above where it says net assets.
Yeah, page 4. So it's under the summary, on the summary page.
First page of the report.
Again, I mean, to my point, that's like a narrative and an explanation. It's not actually, you have to infer that from the numbers. And my question is that clear for the public? I struggle to see that it is. Peter, did you have that question?
No, just following up on Deputy Parkinson's comment that the key figure we should be looking at in these accounts is the surplus for the year of 106 million. Can I challenge that? Because, I mean, surely we should be looking at an operating surplus rather than a surplus that brings in the unrealised gains and or depreciation. I mean, if I was, looking at an operating profit in the old sense.
Well, the state has financial assets of about 1.7 billion pounds. Of those, a large proportion are held for the social security funds, etc. And in a sense, they're not money that we can just spend because they're earmarked. If you take out the sums which are earmarked for other purposes, we have net financial assets of about £400 million.
Yeah.
Now, you can debate whether that, how much attention you should pay to that fact, but I would say it's a material fact, and the £400 million which we hold for our own benefit is likely in an average year to produce a return. Now, you know, if you want to understand the financial position of the states of Guernsey, I submit that it would be unwise to ignore that fact. On the other hand,
sorry, are you saying we should automatically then include the return? Is that on the whole of the portfolio or just on the 400 million?
We, for the purposes of calculating the future financial position of the states of Guernsey, and for the purposes of the £50 million structural deficit, we actually ignore the income from the whole of the investment portfolio.
Yeah.
But if you want to understand the financial position of the states of Guernsey, if you're a lay person looking at the situation, I think you need to take into account that we have £400 million of assets,
yep,
which are held for our own account, and a further £1.3 billion of assets which are held for social security funds, etc.
Okay, so I think so. I think that comes to the nub of the Ipsos reporting and such in the way the accounts are presented, or it touches on it. And I wanted to bring in Claire looking at time here, because you've got questions about the Ipsos reporting you wanted to cover. I think that makes that point. You've got the states, a little bit reserves, then there's a bigger bit, then there's the core, then there's all sorts of different entities being reported in the accounts. And for clarity, I just want to make sure that we're achieving what we set out to do. So, Claire.
Yep, okay. I'd just like to explore the IPSAS implementation project itself and its outcomes generally for the state's financial reporting. So, what would you consider to be the practical benefits of adopting IPSAS? What has it delivered? What's the practical benefit for the deputies and public being a key user group?
I think the quality of the information in the accounts is significantly higher than it was pre the adoption of IPSAS. Adopting IPSAS required us to do an incredible amount of work on the underlying numbers, and obviously to change the numbers in significant respects in terms of bringing in, for example, heritage assets and so on, which weren't there before. But actually simply just looking at the raw income and expenditure numbers, I think qualitatively they are now much more reliable than they used to be. I was the Treasury Minister in 2012 when the states resolved to adopt IPSAS, so I find it quite a pleasure to now be on the other end of that process, reporting to you on IPSAS accounts. So I'm obviously a believer in improving reporting standards. As we have said, these accounts are more comparable with the accounts of other jurisdictions that have adopted IPSAS. And in the days when the auditor's report simply said that the accounts had been prepared in accordance with the state's own accounting policies, you couldn't say that.
May I chip in with one further thing? I think Charles has made some excellent points, especially around comparability, but I think obviously the reason we report to this standard is because, as Charles has said, Deputy Parkinson said, it was a resolution of the states to do exactly that. And from my perspective as a non-accountant, one of the other key benefits that hasn't necessarily been made explicit yet is that because we are adhering to an international standard, we don't get to cherry pick which bits to show and which bits not to show. So I think it does lead to greater transparency in that respect.
I mean, in terms of comparability with other jurisdictions, there aren't actually that many other jurisdictions adopting full IPSAS?
No, there aren't, but IPSAS is obviously based on IFRS, and it only departs from IFRS where there is a good public sector reason to do so. And lots of other jurisdictions use adapted IFRS and under their own frames to prepare their accounts. So there is still comparability there, and a lot of the standards are absolutely comparable.
Because Jersey use their own reporting framework, don't they?
Yeah, they do. I would just say to that, you know, if there's an idea that we might develop our own reporting framework in Guernsey, that would create a lot of work for us. And to Deputy de Samaray's point, that would lead to probably perceptions of cherry-picking what we do and don't want to report. So I think having that, the discipline of international standards is a good discipline for the states.
The extra quality that has come from the IPSAS implementation, would you say that's come at a compromise to understandability of the accounts for your key user group being the general public and deputies?
Well, I think it's a moot point with accounting standards generally, whether the they basically add clarity or confusion. I think we could say that they certainly made the accounts a lot longer and require us to disclose lots of information we didn't previously disclose. But how much that assists the public in understanding them is, as I say, a moot point.
Just in terms of the IPSAS implementation project itself, I mean, it took place progressively over quite a few years. Would you have any feel for how much the project has actually cost to implement IPSAS?
Yeah. So the key time was from around 2021 to 2024 that the project took place. It obviously both did the implementation but also produced the accounts in that time. The total cost of the project was around 1.3 million to do that. 1.3 million. 1.3 million. Around $500,000 was consultants, specialist consultant who was in-house during that project and supporting, and that training has come in-house. So that consultant left last year, so that's now in-house. Valuation of the assets, so bringing the 1.7 billion or so of fixed assets onto the balance sheet, that part cost around 200,000, and then project support, so dedicated project support internally in there was around another 400,000. Financial costs.
Did you do any resource accounting in terms of resource costs that it cost staff time?
No, so these projects were dedicated. The rest of it, there was no increase in the finance resource to do this.
But they were doing this as opposed to something else. So there was an opportunity cost effectively in terms of resources.
Potentially, yes.
So how many staff approximately FTEs are involved in the IPSAS piece of work annually?
What now? Well, it's the finance team and the accounts team. That has grown by one person since the implementation of IPSAS.
So how much additional work has the IPSAS project created on an annual basis? We've already referred to the complexity of the consolidation.
So there's one additional FTE who's come into the team. So one additional FTE who both supports new policies coming in, but also gives CPD training to the rest of the finance team and outwards as well.
And for the project as a whole, have you done any sort of cost-benefit analysis? How would you go about it?
No cost-benefit analysis. I think part of the points we had before, it's a resolution to move to a fully compliant set of accounts, and the benefit of that we haven't measured financially.
To that point, I think the benefit, I don't know how you would quantify the benefit. I think it is largely qualitative benefit, isn't it? So I'm struggling to understand how we would quantify it.
Yes, just following up on Claire's questions. Deputy Parkinson, you said that the benefit of IPSAS was obviously greater transparency, and having said that, yes, it makes the accounts more complex to go through, and I agree with you, IFRS and all these other international standards have exactly the same effect. I mean, whether they make it simpler for anybody to understand the accounts is probably questionable. Deputy de Sommery mentioned that one advantage of IPSAS was comparability, be able to judge comparability. Now, I think we've heard, actually, and I think it was sort of Beth and Haynes who said that actually there were a lot of jurisdictions which aren't really operating on a comparable basis. So is comparability really much of a benefit?
Well,
I said that they are operating on a comparable basis.
But somebody mentioned IFRS.
I said that IFRS and IPSAS are very, very similar.
Okay.
So they're not exactly the same.
No.
But
there is sufficient
comparability.
Yeah.
That's what I was trying to say.
And more jurisdictions are, I believe, moving to IPSAS as well.
So obviously that's a benefit, for example, in terms of the rating agencies. You know, going back to when I was Treasury Minister and before we got the states to agree to adopt IPSAS, the auditors' reports of the States of Guernsey accounts didn't say that they presented a true and fair view.
No.
And all it said was they were prepared in accordance with the accounting policies adopted by the states, which could have meant anything.
Yeah.
So, you know, essentially, if you were an external agency looking at Guernsey in those days, what comfort did you get from that account, from that report?
No, I agree. Can I ask Beth and Haynes, I mean, you have been in the position, I mean, politicians come and go. You were there in 2012 when the states adopted the resolution to adopt IPSAS. Looking back with the benefit of hindsight, do you think it was a wise move?
I do, actually.
And the journey you've gone through has been the pain that you've all endured?
Look, I think that the accounts now are incomparable to what I walked into in 2008. We didn't even have a balance sheet at the time. So we've made huge progress. I do think that adopting international standards is a worthwhile exercise, and I do think the transparency that provides is very valuable. Do I think that there are still improvements that we could make to the accounts? Well, always. And I think that there will always be improvements being made, and we've got to ensure that there's a balance struck between good quality accounts that disclose the financial position and narrative that helps the user of the accounts to understand them.
And the narrative is yours, essentially. It is the Treasurer's report.
Yes, at the moment, yes.
It's your narrative.
Yes.
A couple of questions related to that, and then we'll take a quick break. And actually, in terms of the purpose of the accounts, I'm quite interested in the economic reality of it as opposed to actual, just the financial performance. But it's interesting when you said that about the comparability and the easy to understand. What concerns me a little bit is that we have these accounts that are quite lengthy, much greater cost in terms of persons and resources, in terms of externals. And then the narrative says, ignore that bit, look at the non-core.
No.
My question is, you go through all of that, why are we doing this core, non-core, if then the narrative says, look at the non-core? Look at the core. That's the important bit. And when I talk about the economic reality, to me, I'm concerned about Guernsey's overall fiscal position. That's the only really bit I'm interested in terms of the fiscal position. And that's what you're alluding to there, isn't it? That's why the core is what you're asking people to focus on.
I don't think we say anywhere in the accounts ignore any of the numbers. We set out the numbers.
You say
really,
focus
really
on
clearly.
the core.
No, that
Deputy Summary,
is...
I'm asking Beth this in terms of the Treasury report. Why you point to look at the core? The core is the important bit to look at.
I don't think I agree with Deputy Summary. I don't think the Treasurer's report says that. I think the Treasurer's report tries to report on the group performance, and then it splits it down into core, and as, of course the other entities have a section in the Treasurer's report as well.
On page 5,
so we try to break it down throughout the report to get to the numbers that people want to understand.
So the report on page 5 it says the report will outline the performance of the group as a whole, but focuses on the states of Guernsey core government performance, as this is a key interest of the user of the financial statements.
Yes.
So,
I think the key difference is that the core is what taxpayers are primarily interested in. There is obviously a lot of interrelationship between that and the wider group, but if, to your earlier point, you know, I think you suggested, and it was a very interesting suggestion, you know, do we set out anywhere what your taxpayers' dollars are doing? And I think really this is exactly what the Treasurer's report is trying to help with.
well, I'm not entirely sure it does. If it's trying to, that's one. So in terms of the report, the understand the economic reality, and we've touched on this earlier, and Andy and Deputy Parkers and Deputy Niles was talking about this, we include unrealised gains in the headline surplus. Yeah? Do you think that's a good thing?
Deputy Sloan, I'm really struggling to hear you. Do you think you could say that again?
I said, well, Deputy Niles and Deputy Parkinson nodded, so we include unrealised gains within the headline surplus.
Yes. Because, look, to me, the distinction is not that significant. We could have bed and breakfasted. Do you understand that term?
Yeah.
Explain it for
We could have bed and breakfasted, which means sold and purchased back every marketable security on the 31st of December 2025, in which case all those unrealised gains would be realised gains. I don't think economically the substance would have changed by one iota. So what there is the position is with the investment assets. Some of them are quite illiquid, and you can't trade them in that way. We will wait for years, perhaps potentially, for the money to be realised. But most of them are marketable securities. So the gains are gains.
But the language, and I'll refer to what Deputy Niles said previously about the unrealised gains, that you only look at the realised gains for the underlying performance attributable to the £400 million that you referred to earlier. So the overall unrealised gains, they're not relevant to the 50 million structural gap.
I think they're just gains, and the distinction when you're talking about marketable securities, I think the distinction between realised and unrealised gains is ephemeral, because you could have crystallised the gains if you had wanted to, but why would you incur the trading costs of doing that when essentially you're not changing the economic substance by one iota?
Deputy Niles, you agree?
I think that the gains in a portfolio are just a moment in time that is useful for the taxpayer to understand the state of our overall fiscal position in terms of if equally we were in the middle of a financial crisis and we had seen a 30% loss on our portfolio, the general public would be interested to understand that there's been a negative performance on our portfolio. But that's just what it is. It's a valuation report versus the previous year to understand what the overall effect is, how wealthy we feel as a nation state at that time. But it's no more than that. It's not something that lands in our bank account at the end of the year, and we either accrue for it in our cash accounting, or we take it as an overdraft. It's just a revaluation.
Yeah, the balance sheet, any balance sheet, will be a snapshot in time.
So, but in statements of financial performance, you include unrealised gains as a line item.
And
to get to that operating surplus, it's included as a line item. Is it not?
To get to the overall surplus,
yes,
as required
so
by the accounting standards.
The overall surplus is the headline. But you're saying that if the unrealised gain had been 100 million negative, that would have changed the
Yes,
position.
we would be showing a negative.
Yeah.
So would you have had a different position? Does it help, including unrealised gains, because you take it off to get to your funding gap, does it help you understand the underlying position of the state's fiscal position by including unrealised gains?
We include the unrealised gains in the accounts because the accounting policies require us to do so.
Does it help the transparency of
Probably
underlying...
to some people who are interested in it, yes.
If you're considering the different question of what is the state's financial position going forward, the International Monetary Fund encourages us not to include investment income beyond dividends and interest. We don't have to
That's
follow.
the Jersey treatment, isn't it? That's how they treat that.
So it's we don't have to follow IMF principles, but nevertheless, that is what they encourage us to do. So they would say, well, ignore the investment gains because we don't encourage you to include them.
And that's what the Treasury report suggests we do, doesn't it? We don't. You say you want to take out the unrealised gains to understand the underlying position. Yeah?
That's what it says.
That's what it says, doesn't it?
Yes.
So does the Ipsos reporting standard help us if the narrative is saying, yes, these are the numbers, but actually take that out because it doesn't help you understand the underlying position?
It's because it's looking at a slightly different thing,
Yeah,
isn't it?
exactly.
So our mandate to invest in infrastructure at a certain rate of a percentage of GDP is not something that Ipsos requires us to adopt as part of their accounting standards.
Yeah. It is, to answer your question, it is helpful because it is compliant with the Ipsos standard that we have adopted, and therefore it gives us the benefits that we referred to earlier in terms of international comparability and better transparency. So, yes, it is helpful in terms of the accounts, but what you're alluding to is a slightly different question, which I don't think should be wholly conflated with the accounts.
So where it is useful and where it is a discipline, if I may, is if you look at a trading asset such as ports on an accrual basis, because we understand now with greater granularity how much the removal of PFAS is going to cost, the discipline has forced us to accrue £9.6 million for that in the accounts this year, which has had a significant effect. And so Ipsos requires us on an accrual basis to adopt these disciplines.
Yes, I appreciate that. But Deputy Summers, to my point, I appreciate international comparability to the no other jurisdiction that reports to an Ipsos standard is important. But my point is that when we started, these are accounts effectively for the public and for deputies. And the narrative is asking you to discount the presentation of the accounts to understand it does.
It doesn't ask anyone to discount.
My hypothetical question back to Deputy Knowles would be, if the markets had a poor year last year and there wasn't 100 million whatever unrealised gains, it was actually 100 million unrealised loss, what would that impact have on our operating position, which is the headline number that Deputy Parkinson said should be the main focus?
Well, we would be reporting a loss or a very, very reduced increase. But we're looking at 2025. This is a look
I'm looking
back
at the story that the accounts is telling us. I'm not actually concerned about next year's performance. I'm saying, look, from the accounts.
Yeah, the accounts are the accounts.
The accounts would show a loss in that situation.
Yeah.
And would that change the underlying fiscal position of the states?
No, in terms of a separate question of what is our long-term deficit or surplus going forward.
No, I'm asking.
No, so in answer to your question, simply...
It wouldn't.
It would not, no.
Would it?
It would not affect it at all.
And it is noise in terms of understanding
Correct.
the position.
Because the underlying fiscal position is interpreted from the amount of revenue we receive, the amount of expenses we pay, and the amount of investment we choose to make.
Correct. I agree.
And that is it.
Well, on that note of harmony, Peter,
Can I just...
I do want to conclude because we are on the hour. So
Well, can I just... A quick one.
Be quick.
Deputy Parkinson, you mentioned that obviously you could do a bed and breakfast at the end of the year. As I read the accounts, and particularly the summary, produced by the Treasurer, actually you did realise investments during the course of the year and you used them for spending purposes.
Yeah.
Despite reporting investment assets appreciated by only 13 million in real terms, a reduction of 2.5%, while investment appreciation of 119 million was recorded. They were offsetting withdrawals during the year. So the only way that actually the states of Guernsey, the core government, is meeting its cash requirements is by having to realise assets.
Yes,
so the portfolio is diminishing.
We're drawing from reserves to invest in capital assets.
Exactly.
Yeah. So,
So some of the investment return has already been utilised.
Yes, yes, of course. The total return for the year will be partly realised gains, but partly based on the valuation on the 31st of December, some of the gains would have been unrealised.
So of the 400 million which is available, the core investment, how much of that was actually realised during the year, do you know?
Do we know?
Come back, I think it's around 100,
Well, we can come back.
120. It's in the investment section of the Treasury report.
Thank you.
we'll come back. Okay, we will break for 5 to 7 minutes, just to say comfort break for people. It's there if they need it, and we'll start again in a few minutes' time. We're good? Okay, welcome back. Part 2 of the Public Accounts Subcommittee hearing on the State's Accounts 2025. We're starting the second session, hoping we'll have a nice break, take a comfort break if you needed one. And we'll kick off with a discussion. The next topic we'd like to cover is in terms of internal controls and assurance. So over again to Peter.
Thank you. Can I, really focusing on pages 45 and pages 50, the Statement of Internal Financial Controls is produced by the Policy and Resources Committee. Can I just pick up a couple of points there? References made, and I think you have already alluded to, the internal audit function. Can you advise how large is that function? I mean, how many people are actually engaged, and how many formal internal audit reports did you receive during 2025?
So, in terms of the internal audit function, I'm not certain on the number. There's around 4 to 5 people in that function, and they cover all aspects of internal audit. They have engagement with the auditors through this process, and the auditors review any reports from that function through the year as well. So that will be reports on governance and risk and process management across the organisation. So the auditors have access to that and utilise it.
Would the internal audit have had any input or any ability to flag up the issues about the MyGov expenditure issue?
I don't know the answer to that question.
They were involved.
They were very involved
in that.
Yes, but was that sort of ex post facto after Mr. Smiley's report?
They were involved in the investigation undertaken by the Chief Executive Officer.
But during the course of 2025, would they have had any sight of the issue about the MyGov?
Close the project.
Yes, I think they would have done, because the Chief Executive instigated a review of what had happened during 2025.
But just to that point, I think MyGov programme had been closed down prior to 2025.
It was closed in 2023, I think.
Yeah.
Well, why was there some expenditure used? Your committee, or sorry, you or your predecessor committee used the ability, actually approved about a 4.25 million spend on MyGov during 2025, if it had been closed off as early as you said.
There was a separate. There have been 2 separate MyGov programmes. So the original one was closed in 2023. A successor programme has been initiated, and that's the funding that's been approved in the more recent past.
That's MyGov 2.
How much of the MyGov expenditure? Sorry, I mean, we're struggling to find out exactly how. You know, we know there's a figure of about 20-odd million to be written off. How much of that was actually capitalised, or is it purely expended out of revenue?
None of it. So the original MyGov was all expensed in the year in which it was occurred.
So none of it was capitalised. So there's no sort of formal write-off in the.
There's no write-off, no.
Okay. Just going back to internal audit. And the responsibility for internal controls, that rests with the Policy and Resources Committee. Can I ask, generally, those members of the committee, are you satisfied that there is the adequacy of your internal controls?
I think probably that function is under-resourced, but it's actually done a lot of sterling work in 2025 and 2026.
And just on the governance point, they do, I believe they report directly into the Chief Exec and Head of Public Service, but we also make very clear to them that they have a direct line to the committee whenever they need it.
Yeah. It's interesting, actually, your comment about the resource, because, I mean, you've got, the accounts show that you've recruited an extra 30 people to do with HR. Perhaps some of those should have been used to buttress up your internal audit?
Those are operational decisions for the Chief Executive.
But
if very nice. Yes, Minister.
But would have surely come to P&R, wouldn't it? That wouldn't have been I'm pretty sure.
Well,
there would have been a paper to P&R for that.
Yes, it was agreed by the previous P&R, and obviously the funding for it was approved by the states as part of the budget.
But I think it's reflective, isn't it, of the changing size and shape of the organisation and in response to changing demand for public services, in response to changing demographics in part, or that's probably the main driver. So I think most of the increase in staff overall has come from health and social care, and then you obviously need more people in the HR function in order to sufficiently carry out your employer responsibilities.
How many people do you have in your HR function? I mean, you got an extra 30, which you recruited last year. But what's the total?
I'd need to double check. I don't want to give the wrong number.
I just make the point, it seems to me...
Sorry?
Is it like hundreds or is it scores?
I think.
Okay. I just make the point, I mean, from Excel perspective, internal controls, where you're reliant upon just 4 people, there's a mismatch. Yeah. And just to make the point, I mean, obviously the auditors, in their note on page 50, we also obtain an understanding of internal control relevant to the audit and audit design, audit procedures, but we're not for the purpose of expressing an opinion on the effectiveness of the group's internal control. So the only way we can have a view about the effectiveness of the group's internal control is by the reliance upon P&R itself. So you are the ones who are signing off that you're satisfied we have effective internal controls.
Well, I think Charles has said we, believe there to be under-resourced. It is a conversation, and part of the benefit of this kind of process is that, if you've got any recommendations, then we're all ears.
Yeah. Okay. I think that's probably actually all I need to do at the moment.
Okay. So, we'll move on to the next area of cash and reserves. Although I'll make a point in terms of the HR and the numbers. You do say the states has grown in size and complexity, because actually, Charles, when the first accounts that I was a member of staff, and you remember your Treasury Minister that I recall was the 2008, and we had 4,540 FTEs, and in 2026 it's now 6,803. Now I know I think there's a Rini included in there and a couple of other entities, but that's quite significant. I think, per paraphrase, yes, Minister, isn't it? If only the private sector could match this sort of growth, we'd be in a completely different fiscal position, I assume.
Yeah, I mean, absolutely. It's demand for public services is the main driver.
Can I just come back to one point?
Okay.
Which also relates back to my government, possibly also to Agilicis. There's a post-balance sheet note on page 228 of the accounts, which I've lost now. Oh, here it is. Which it talks about, it's events after reporting date. And the only thing they note there is on 13th March 2025, which I think actually probably came within the reporting period, was an extension to revolving credit facility. There's no reference there made to Agilicis. There's no reference made to MyGov. Don't you think it would have been appropriate for some mention to be made after the events? Especially if you were writing off. Well, query whether you actually are writing off the MyGov expenditure, or is that you just acknowledge that expenditure which was spent and not going to be recovered. But what about the Agilicis? Was there any issue about that?
Well, the MyGov 1, if I can call it that, was closed in 2023, so that wouldn't have been had any effect on these accounts.
But the decision to write it off, was that taken in 2023?
The expenditure was written off in the years it was incurred. None of it was capitalised.
Okay.
So can I'll hold my hands up. I can't follow the accounts very readily. So bear in mind that's the motivation for the question. Where in the accounts was the expenditure on Agilicis? What's the line that was there? Where would that have come from?
It would have been in contracted out services
so it
previously.
would have been in support services within, when you look in the consolidated...
So which page am I looking at then?
Be about note 6. No, sorry, probably note 7. So on page 70, note 9A, support services, that has contracted out work. So that covers a number of items within there, and most of the Agilicis cost would have been within there. There would have also been some within services in note 9B as well.
And projects.
Yes.
And projects, yeah.
And also there's a pay impact from when the Agilicis contract was terminated in 2025. There was an impact on the number of people that needed to be brought into the States to compensate for that.
Okay, so that contracted out work and services, so there's 93 million, that's correct, isn't it, in 9A, and 99 million in 9B. Now, I'm not saying that's all Agilicis, but they're referring to two different amounts of expenditure.
It's the nature of the expenditure, correct.
So the notes are, so you could have, it's double counting the same, that's the same 90 odd million squids, just the count.
No, it's two separate numbers. So contracted out work will be more when we are getting that work done by a third party. So another example of contracted out work may be within MSG is a good one. Yeah. And then services are more when we are buying a product or something like that from another party. Yeah. So it's the nature of spend, which is how things are broken down in the notes, and how things are broken down in the statement of financial performance.
Okay. Because spending on support services, now you mentioned it, has gone up quite significantly over the course of the year, 14 million, 14.5 million?
Correct. I would need to look back. That is commented on, I think, in the Treasurer's report.
And advertising and marketing up by 800,000. It's quite a significant source of growth of expenditure, which presumably isn't demand for services, it's support services, that's internal costs.
I would need to take those away and give you the details.
So that's where the Agilicis numbers. But to Peter's question on the MyGov number, then what's the MyGov number separate then? If Agilicis were doing the MyGov,
Sorry, I'm struggling to hear.
Sorry, I said what's the MyGov number referring to? If Agilicis is out of the contracted out work, the MyGov that's referred to later in the capital votes, what's that referring to?
That's what we call MyGov 2, which is paused, which was, I think, basically an attempt to see whether any value could be salvaged from the work done under MyGov 1.
So 4.2 million was spent on that MyGov 2?
I believe
in
so.
2025.
There's a figure here.
So, and Agilicis would have been here for 6 months of that. Is that our expenditure on our own internal 4.2 million, or is that Agilicis 4.2 million?
No, I don't think Agilicis were involved in MyGov 2, actually.
It's 4.2 million of our expenditure.
No, it would have been expenditure with third parties mainly, but it's the total project costs. Yep. We would need to look at the breakdown of that, but that would be the total project costs, some of it with third parties.
But it is separate to this support services number? We're not...
Yes, we're not double counting anywhere, no.
I mean, it's not double counting, just we're not looking at notes that are referring to the same cash, but classified in a different way. It is additional cash that's been spent there.
They're separate, those notes. So page 25 of the Treasurer's report discusses the key changes in support services and supplies and services. So support services, insurance costs increased by 4.2 million, secondary care on island by 1.2 million, and project expenditure, so that directly expends project expenditure across a range of projects, was 3.5 million higher than the prior year, so that will fluctuate. And in terms of supplies and services, off-island healthcare was 1.5 million of that, and pharmacy costs were 1.9 million. So the Treasurer's report pulls out the key areas. Obviously within that note you've seen, that is the group, so there will be a number of other things. And it discusses in the component entities other drivers of cost as well.
Okay. Because if you go to the page 24 previously, you get just the general sense of the costs. We're straying a little bit. You got all the little triangles, up 4.8%, up 4.1, up 37.7, 34.7, up 8.5, up 7, up 6.1. So that's the general trend of costs. But sorry for that segue, but it was related to the MyGov and Agilicis and trying to figure out where in the accounts is accounting for the cash. But speaking of cash, Claire, you had some questions on cash?
Yeah, I think it would be helpful to explore the picture around the cash and the reserves as presented in the accounts. So could you maybe describe how we go from a £160 million surplus to a £9 million reduction in cash, just for a layman, not an accountant to an accountant, but how would you explain it?
So there's two changes in this. One is around the increase in debtors. So tax debtors particularly have increased, and that's twofold. One is the Pillar 2 part, which is a due amount, but as we've noted, it won't start to be collected until 2027. So that's increased debtors by 39 million. And the other part where we've seen those prior year taxable impacts coming in of 34 million, then not all of those have been collected at the end of the year. Within Q1, a further between I think it's about 16 million was collected. So those are due and coming in. So we saw tax debtors increase overall by about 90 million.
Okay.
Within that. And the other part is our direct cash spending, our sort of cash capex, was around 80 million, but the depreciation is much lower. I just need to pull out the number.
Yeah.
The depreciation is much lower, which is obviously
about 50 million.
50. Yeah, thank you. So those two are contributing to a large portion of that. Obviously, there's a number of other movements within there, but if I pick the two largest elements, they would be that. I think within those, the tax debtors, as I said, with Pillar 2, we're going to see all of next year in there as well, so we're going to see an increase in that, and that is probably a change in our structural working capital for that. And then
if they want to use the accounts to understand the government's underlying position, that's what they're supposed to be able to do. That's what the public's supposed to be able to do. We have a tax debate coming up. We've just published the accounts. It should be clear from the accounts what the underlying fiscal position... No.
Well, not in entirety. Yeah, this is exactly the point, isn't it? So the 2025 accounts give us a clear understanding of what took place and what the situation was in 2025. But what we've been saying consistently throughout this, and what the Treasurer's report says...
I think the point is that they don't, because of all of this caveats and explanations that need to be provided. I'm not challenging whether the accounts have conformed to an international standard.
Great.
I'm saying whether actually, once you've done that, it's particularly helpful to understand what our underlying fiscal position is. And I don't think it is. Not when we've just had that conversation, we're using unrealised gains in the accounting treatment as to generate our overall operating position, and yet, as the Treasurer has just nodded, none of those reserves are actually available to be attributable for anything really.
Look, we've said that there's 400 million of reserves that are available to the states of Guernsey. Our plans for capital investment would absorb most of that money. But obviously, we haven't made those investments yet. The states could decide not to invest in capital. We'd have 400 million available. All we're saying is there's 400 million. We've earmarked that for future capital investment.
In the accounting realisation, in the unrealised gains in the accounts, also includes the unrealised gains according to the social security funds, the other funds, and all the hypothecated funds. As a number, an unrealised gain from the 400 million might be a more appropriate figure to give you a sense of what might be available in terms of revenues for that particular year, but not the overall number. And I'm not saying that the accounts themselves are wrong. I'm saying that you are following them to an international standard. My point is that it is not a helpful picture. It has to be explained.
So the accounts, I'm really glad that you've recognised that the accounts are not wrong. That's reassuring to hear. And the accounts give us a certain understanding of what happened in a particular point in time. Basically the answer to your question, if you take a high-level view at it, is the answer to your question is answered in different documents other than the accounts. So the issue about the long-term financial position and what we're going to need in future is something that we put more detail around in the tax reform policy letter. So they are two different issues. The accounts have to be accurate for the year of 2025. But when we're looking at future investment, that is something that obviously isn't included in the scope of the 2025 accounts. And therefore, your question is answered by not this document, but a different document, but informed by the information in the accounts.
Right. I will go back and check exactly what you said to understand the answer to that. But you make my point for me in that I understand the accounts are a snapshot in time. You know, I might be an economist, but I have some accounting qualifications. That is not my point. My point is the presentation, the manner in which they are presented is not helpful to understanding the underlying fiscal position.
Can I? Yeah, sure. So if we come back to page 4 again in the report, very helpfully the Treasurer pointed out where the disparity is that you're looking at as to what we need to do or what, in order to fund the investments that we want to, what the funding gap will be. And there's a rationale behind that. And if you looked at what we discussed earlier, if you looked at an equivalent private sector company that would do that, the private sector company the accounts would present exactly the same position, but you would have a chairman's report at the front of it that would say what is the future of the company and what do we need to do and what investments do we need to make. And that's an equivalence. So our funding gap and what we need to have in order to fund the investments we want to make and to ensure that we just not very much more than stand still is where we're going with the fiscal tax reform.
So what would be a target for the freely available reserves? If 400 feels inadequate, what figure would you be happy with?
Are you talking about the longer term financial planning? So things like the medium term financial plan?
Yeah, I guess it is longer term financial planning, yes, because we've got 407 now. What would we like it to be, which is looking into the future?
That's a...
Yeah, we will be producing a medium-term financial plan by the end of this year. Before then, we think the states need to agree the fiscal policy framework to say what the objectives of the state should be. And then within the context of the agreed fiscal policy framework, we will produce a medium-term financial plan. Which
again is a matter for the states to decide. So we might propose something, the states may decide to adjust it through amendment. So these are questions we're.
Those are two fairly key documents.
Exactly. And it really underscores the difference between that forward-looking financial planning and the accounts. So the information contained within the accounts is really useful. I would say not just the 2025 accounts. What really gives us a good sense of longer-term trends is when you look at previous sets of accounts as well, so that you can understand directions of travel. And that all feeds into the forward-looking projections and some of the decisions that the states will be asked to make through the FPF and the medium-term financial plan.
We've only really got one set of accounts that are comparable, though, to look back at, haven't we? The 2024 accounts.
Yeah.
Okay.
Yeah.
Very close to the end of time, so I was going to point first. We have only got about 10 more minutes. But see, I think my personal experience, it's almost like trying to help you here in terms of the picture from the accounts is not clear. And if I go to, and I'm not talking about the future, I'm talking about actually what happened in 2025 is not clear. Now, what we want to come on to is capital. We're finally to understand where capital expenditure is accounted for in the accounts. But I'll just give to leave this unrealised gains thing to bed, the final comment on page 26. The general investment portfolio, which holds the group's long-term investments, generated net returns of 118.9 million in 2025. That's our unrealised gain.
No, some of it will be realised. Some of it will be realised.
Not there's an accounting number, the unrealised gain in the accounting number. When you come back, all of it will be realised. At the end of the 2025, the value of the portfolio remained broadly unchanged at 1.73 billion. Right? This reflects net withdrawals of 122.5 million during the year to fund capital investment and other commitments. So, actually, this unrealised gain was effectively, Charles, net, it was all realised.
Some of it was realised.
Well, no,
I've just been saying.
The net number was all realised because you had a gain of 118.9 million and net withdrawals were 122.5 million. So it was more than that. The net position, there was more realisations than not. The net number was a net realisation. Right? But our operating surplus of 100 and whatever 8 million it was, is using the unrealised gains to present a picture of a big surplus. That's what it does.
I'm struggling to see what the contradiction is. Basically, we took out whatever the number was, 118 million or something, to invest in capital, and at the end of the day, the reserves were roughly the same as they were at the start. So
the reserves went down.
Well,
all of that,
2 million.
All of the 7% expenditure, 7.4% reserve return was effectively spent. And, I would say, only 400 million of that 1.7 billion was supposedly generating returns that was available to us. So we've used up all the returns of cash that was actually assets that were hypothecated for other purposes. We spent the returns that should have been attributed to the social security funds, effectively. That's what we've done.
We spent assets.
Yeah.
Withdrawn from the general revenue reserve.
We might have took it from there, but the actual returns that we have used were somebody else's.
I don't think that's correct.
That's not correct.
And that was the way I'd describe it.
Okay.
Now, can you explain to me, though, how do you trace capital expenditure through the accounts? Just a completely, right, a layperson, I've got this, where do I start? How do I understand it? Because it's not a line item in the statement of financial performance. I just want to understand.
Note on fixed assets and so on.
And it's not a trick question. I just don't understand how you're just supposed to follow it.
So there are notes on fixed assets. So you can always start from the primary financial statement. So within the balance sheet there is fixed assets, PP&E, and intangible assets. So you can always look on your statement of financial position on page 56.
Okay, so we start on page 56.
So within there you can see the very first line, property, plant and equipment, which is tangible fixed assets in operational use. So everything from roads to hospitals to aircraft is within there. There is also intangible assets.
No, okay. So this is am I looking at the consolidated statement of financial position?
Correct. Yeah. That is consolidated.
And again, I'm not an accountant. Is this effectively a balance sheet? Is this?
Yes.
This is a balance sheet.
Okay.
So that is the net value of those. They are all of our operational assets are valued at cost less depreciation. So obviously an accounting point, and there's a policy that describes the length of depreciation. So that is all of the tangible fixed assets. We also talk about intangible assets, which are software, licenses and internally developed items. The next area to go to, which gives more detail, is the note on page 77. And it has 77 and 78. And this breaks down, 77 is current year, 78 is prior year, and this then breaks down those PP&E by land, buildings, and you can see the other parts there. And it gives you, so when we look, it breaks it into sections. So the cost at January 2025 was just shy of 3 billion. There was 82 million or 82.5 million of additions. There was just shy of 15 million of disposals. And there's a reclassifications and transfers line that you always see. And then the next section shows depreciation and impairment. And then you have one for the comparable year. So that allows you to track
So to help you there, on the final column on page 77, sorry, no, page 70, yeah, page 77, where it says total PPE, &D, 1, 2, 3, the second number down, 82,454, that is a capital that's additional expenditure on capital. It's addition. That's where that number is. That's there it is.
Yep.
So that's where our capital expenditure is hidden on page 77. And that number, and I'll make this point, is the big number that apparently going forward is our funding gap. But it's very difficult to find.
So I think this is where interpretation and use. So any set of accounts under FRS, IFRS, IPSAS, etc., will have this note and it will look the same. So yes, you have to be an accountant or used to it, but anyone would know to go here for the change in that valuation and to look in the cash flow statement for the cash part.
And to Charles's earlier point, the amount that we're going to spend in future on infrastructure, etc., is ultimately a political decision and one that will be made through other states' debates. Okay,
that number's 82 million though, yeah? Now, we're talking about capital expenditure of 2 million, and we've missed, actually we had lots of little questions about capital, but we've run out of time. 82 million, if our GDP is 3.5 billion roughly, I can't remember the last time we published it, but give or take, 2% of that is about 70 million, is that right? So I'm looking at 82 million. That's broadly there already, isn't it?
Yeah, so this is one of the first times in recent history that we've met our target.
Yeah. So we're actually spending. That's it.
Around 2%.
So in terms of
a lot of them are under
the 2025 position, then on its own should be able to reflect our general underlying position, shouldn't it?
No.
If you follow my logic through, sorry about this. If you follow my logic through, the 2025 accounts should be a reflection of our ongoing underlying position.
For that year. But
doesn't matter. For that's the 2%. For the 2025, that should reflect, given that our capital expenditure is roughly about the 2%, so we should be able to look at the snapshot of the accounts and figure it out.
I would say that if we were doing cash accounting, yes, that would be the case. But we don't do cash accounting, we do accruals accounting, and so we develop our assets, we put them on our balance sheet, and then we depreciate them over their useful life. So the statement of financial performance includes the depreciation amount, which reflects our historic investment in CapEx. So yes, on a cash basis, you're correct, but on an accounting basis, that's not the case.
To get to the longer term position, first of all, we stripped out in investment gains. Secondly, there's this adjustment between actual CapEx and depreciation. Depreciation is, if you like, a measure of capital consumption. It doesn't create a sinking fund to enable us to buy new stuff, right? So in effect, we add back depreciation and then subtract the 2% of GDP target to get to the long-term a funding deficit or whatever you want to call it.
And the other factor that I think is important to bear in mind when we're looking forward is that the baseline isn't a static baseline, so demand may need to change, GDP may change over time, etc. So a single year is very useful, but it's not the same thing as looking forward, as projections of that funding gap going forward.
Well, I think you've got an expenditure in here that reflects purportedly the underlying position. Therefore, that should be useful enough to as a guide.
For this year, yeah, for that year.
But this year is clearly, the expenditure is representative of the overall position.
Yes, but
what's been described as our future.
But it won't be apples and apples next year necessarily, because some of the baseline
2025 numbers really are all you should need to understand. You don't need to go for it. It's in there.
Yeah.
Anyway, I appreciate that we haven't digressed, but we've run out of time. And thank you very much for that. And on that note, in terms of our what we set out, we do feel that there's no dispute that these are to an international accounting standard. There's no dispute that they're accurate. In terms of understanding what they're saying, I think it's more difficult to interpret than when it was in 2008, 2009. I could pretty much follow those accounts pretty easily, actually. Nowadays, it's a little bit more difficult, and there has to be that narrative to explain what they know. The numbers might say this, but look at this to get the underlying position.
I would say that the accounts that we used to look at in the 2008-2012 term were opaque to the point of complete impenetrability. And so, and as Bethany said, they didn't even include a balance sheet.
I know.
And, when I asked, for example, at that time as the Treasury Minister, can you give me a list of the properties the state owned? The answer was no.
Yes, I know.
Because the state had no record.
Oh, for those simple days, eh?
Yeah.
But
I would agree with you, Deputy Sloan, that, and also with Deputy Parkinson, that we've got to a level of international standard in our accounts now, but it doesn't necessarily help us to articulate exactly what we need in the coming years, and so that's going to be another task for us.
And following on from that, we are, as ever, very interested in any feedback and suggestions that you might have about how we can improve this. It's only the second year that we have reported to this standard and in this way, and we're very hopeful that we can continue to improve it. So we very much welcome any suggestions from your committee to help us do that for future reporting.
thank you very much, Deputy Chairman. Actually, you do remind me, we did exchange conversations about the quarterly reporting, and about the template reporting. I think we're due the second template of the quarterly reporting because we'd given you some suggestions, and P&R had come back to us and said, yes, very good. I think we're probably a bit overdue on that, so I look very much looking forward to that. I know that you've got 1,000,001 things to be doing. But on that note of harmony, if you ask, thank you ever so much. Thanks to my panellists, Claire, Peter, and also the rest of the PAC that helped to put together that briefing for us. And we'll look forward to the debate a week on Tuesday. I should imagine it's shorter, probably shorter than this session, to be quite frank. And the debate on which this will feed into of the other report that was published this week. Thank you very much.